Clearly, we're there. History is repeating itself right before our eyes. No one is talking about it. No one sees it. And yet, you might be about to repeat the mistakes you made before. And I don't want you to make them. So what are we going to do today? We're going to analyze. That's what we do every day because Wall Street is bouncing back strongly and tech is rebounding. And yet Bitcoin is dropping again, even though there's already a bit less pressure on the market. So today we're going to set things straight. We're going to take a breath. We're going to set aside the euphoria, whether it's going up or down, and we're going to analyze. That's what we do every day in our daily updates, and there are more and more of you joining us, so thank you for that. And we'll also finish by looking at the key levels to watch this week. So I was also thinking about starting a challenge. I have a little idea. I actually thought of it this morning. But if you want to know more details, if you want me to set it up, just write the word challenge in the comments. And I'll tell you about it if you want to crush it this year, because I'm more motivated than ever to go all out. Then it's up to you to let me know if you feel the same way. I'll talk to you about it next week. And thank you, as I said earlier, to everyone who subscribes. There are more and more of you. Thank you for that. You give me incredible strength. So what's next? After weeks where every macro stat made the market panic, we're finally seeing a real rally in US stocks. So let's take a moment to reflect. The question is, what impact will this have on the crypto market? What impact on the global market? What's interesting to analyze is that this isn't just coming from hopes of a rate cut. No, what we're really seeing is a return to fundamentals. So inflation expectations are calming down. Let me remind you, tech is starting to stop bleeding and Nvidia is up more than 6% again. It wasn't that long ago. And we also have Broadcom, which is bouncing back by 5%. So what is the Nasdaq doing? It's stabilizing. And most importantly, this move isn't just coming from the giants because the Russell 2000 is also rebounding. And that's an important indicator, which is often correlated with Bitcoin. And generally, when small caps, meaning companies with small market capitalizations, projects that aren't highly valued, when small caps start to follow, it's often a sign that risk appetite is coming back. And by the way, we've seen Bitcoin's dominance, which had dropped slightly here. We were at 60% a few days ago, and now we're at 58%. What does that mean? We'll take a look at that. But of course, crypto took a breather for a moment with BTC climbing back above 70. We went up to 71, 72. The fragility hasn't disappeared, far from it. And in my opinion, we could potentially see even lower levels. You need to be prepared for that. But it reminds me of the video from 2 days ago that I told you about. But as I was saying, this lull was very brief. That's actually what I mentioned in this morning's reel, which I recorded yesterday and published quickly this morning. Go check it out. In my shorts, I try to make 2 or 3 reels a day with lead magnets, giveaways, and so on. Anyway, the prophecy came true, and that's exactly what's happening this morning. And in my opinion, that's the scenario we need to consider. Because while stocks were catching their breath, Bitcoin reminded everyone that the stress phase wasn't over. If you think otherwise, you're going to get burned. And in just a few hours, the price dropped below $68,000, so that's nearly a 4% drop. A new wave of liquidations totaling more than $98 million was wiped out, this time on the long side. So the people who bet on the upside, those using leverage, the pro traders. And this shows something very simple. Even the slightest selling pressure is still enough to wipe out positions that are too fragile. So if you think Bitcoin is going to recover all its losses by stringing together green candles, you're misunderstanding the current dynamic. And precisely, if we take a quick look here, Bitcoin here on the daily chart, we have this candle from yesterday, which is green, sure, but it hasn't engulfed the previous day's candle, possibly to go and test lower levels. Historically, that's what happens. I'm not pulling out my crystal ball, but be prepared. Don't expect a crazy surge. It could happen in a few days, but it's not going to happen overnight. We'll see. I'll talk to you about it in today's technical analysis. But in general, this is a very simple indicator. If we don't engulf the previous day's candle and the market is out of sync, unstructured like it is right now, we're not going to bounce back overnight. We'll see. So no financial advice, but in general, if we look a little at history, at the history books, that's what happens. Anyway, as I was saying, quite simply, we're in a market breathing phase. I'm going to come back to this slide. We're not yet in a very clean bullish recovery because while crypto is fragile, Wall Street is showing a series of strong signals. I'll tell you about it. Because the Dow Jones has just crossed 50,000 for the first time in its history, by the way, and Trump posted a tweet in his own unique style. And he's taking advantage of it because he's fueling the narrative by saying he already sees the index, so the Dow Jones reaching 100,000 by the end of his term. And let me remind you, that's by then. in 2 to 3 years. So that doesn't mean everything is safe, everything is certain, but it does confirm one thing. It's that capital is flowing back into risk on the equity side, whereas crypto is still in a digestion phase. Everyone is bashing it and saying, Bitcoin, we go to fucking zero. But how many times has Bitcoin been declared dead or dying with people saying no one cares about it anymore? Right? Taylor Phoenix, it's going to come back, that's for sure, okay? It's just a matter of time. But let's move on to the important metric here, because yesterday was a very special day, because after a red candle, we lost $10,000 in just 24 hours. Well, Bitcoin did the same thing again, but with a green candle. So it's playing with your emotions. So obviously the question is, are investors coming back? On the chart, one thing stands out. Stablecoin inflows have doubled. We had 51 billion at the end of December. Today we have 102 billion. What does that mean? It means that the money isn't leaving the ecosystem. It means it's waiting. And that's typical of capitulation phases, meaning investors are moving out of risk. They're going risk off. They're hitting the risk off button, not risk on, right? And they're moving into stable assets. So stable coins are pegged to the dollar. You know how it works. But in the meantime, we have a slightly clearer area here to reload. Historically, these periods often come right before sharp reversals because the liquidity is already ready to move into stable coins. It's ready to be deployed as soon as the market stabilizes. And it will take time, of course, a capitulation through time. And we also have this tweet, which is very striking because, in fact, it perfectly complements what we just said. It's that as soon as Bitcoin hits the $60,000 zone, you have to think in terms of zones and not in terms of price. This is very important because now that Bitcoin has broken through $100,000, $126,000. In fact, the percentage drops do not have the same impact as when Bitcoin in 2018 was at $19,000. Do you understand? So you have to think in terms of zones because now Bitcoin has expanded its range. And so the price is also very volatile and very high. The price scale has become very large. Before, we used to think in terms of between 0 and 20,000 or more, especially between 20 and 40. But now it's between 20 and 126,000. So the gap is much bigger. So you shouldn't think in terms of price, potentially in terms of percentage, but especially right now, you shouldn't look at how much your portfolio is worth in dollars. For example, if you have Bitcoin, think in terms of Bitcoin. I have 0.0001 Bitcoin. And not, I have $5,000 worth of Bitcoin. You shouldn't think like that. You need to accumulate. You need to think in terms of Bitcoin. You shouldn't tie it to a government asset that can be printed endlessly. I believe so. 40%. So before, I think that 2 years ago, it was 80%. 80% of the dollars in circulation were created in the last 3 or 4 years. 80%. I think now about 40 to 50% of the dollars that exist were created after 2020. So when the COVID crisis happened and they turned on the famous money printer, by the way, I'd be curious to buy one. If you ever have one, a dollar printer, that would be cool. What are we seeing here? It's that the Coinbase premium has turned positive again, and this is for the first time since mid-January. So what you need to know is that when the price is higher on Coinbase than on other platforms, offshore, that's what it means, and that's what it's for. That's what this indicator is used for. The Coinbase Premium Index means that US demand, American demand is currently absorbing the supply. But this isn't proof of a bottom, because if you're trying to catch the bottom, no one will get it. Unless you make a daily dessert, like I recommended to you 2 or 3 days ago. But this kind of signal that we see when the strong hands start to absorb the fear, and above all, we're talking about fear. On a global scale, we also have another indicator that shows the public's attention. Attention, in the end, we could interpret it like this. People are watching Bitcoin. People aren't taking action. People aren't buying. But they're interested. They're curious. They want to know. But they're not pressing the button. Buy. They're not taking action. They're passive. They're observers. But if you look up the word Bitcoin on Google, it reaches 100. Often, what we expect during periods of euphoria is a renewed interest and for retail investors to come back here en masse. And so we look at this indicator. That hasn't been the case in 2024 to 2025, but it was the case in 2026, but in the wrong way. That is to say, Bitcoin had to correct for people to become interested in Bitcoin. That's what's crazy. So the timing makes sense. In other words, it happens when Bitcoin drops sharply. Retail investors come back to understand, not to invest, whereas it should be the other way around. But it doesn't mark an instant bottom. Fear draws attention. And attention often ends up attracting liquidity. And often, the people who take an interest in it, and I think most of them actually, are the haters. Maybe they are Bitcoin haters saying, I knew it, I told you shouldn't have invested. Even though they're still interested. But when the price goes up, people look at the price from below but never from above. They'll get involved. They'll commit. They'll take action once the price starts rising again. But by then, it'll already be too late. Anyway, on the institutional side, what do we have? We have Coinbase, which sums up the situation well. The break below $88,000 or $90,000 is not just a correction, it is potentially a regime change, and that is something we need to be aware of. The key support level, in any case. The next one is 64, all right? We're right on it. And the first real resistance is at 82,000. I told you we were going to take a look at it, the key support levels. So we'll really need to... Here, I think there's a very interesting accumulation phase between 64 and 82. So the market has lost its momentum. That I'm not going to deny. With such sharp breakdowns, the market needs to be rebuilt. It's going to take time. So we're in an environment, let me remind you, that's currently dominated by caution. And it's obvious. Withdrawals from ETFs, whether BTC or Ether, that's the case. But Coinbase also reminds us of something. If the Fed eases up, lowers rates, and we'll look at that in a moment, liquidity can return very quickly to risk assets, so get ready now. So we're navigating between two technical levels, also macro levels, and an overall fragile sentiment. As usual, we'll take a look every Saturday. The macro outlook for next week, the key figure to watch is the US CPI, which will be released on Friday. So that's the annual US CPI for January. So the release will be on Friday, February 13th at 2:30 p.m. So if inflation comes in higher than expected, it means it will reinforce the idea of a pause in rate cuts. So in such a fragile market, I think the impact could be more severe than usual. So yes, there's a breather, but caution is needed because we're in a state of total hypersensitivity. So we're seeing signs of a breather. We're also seeing indications that the pivot zone is forming, but that doesn't mean you should go all in. You shouldn't do a lump sum investment. DCA. If you've started a DCA, by the way, after watching my video, feel free to mention it in the comments. What kind of DCA, over what period? That way people can take a look at what others are doing. What is the community doing? But the market is still fragile. So strategy, patience, and risk management are the key words. We're keeping an eye on the range between 64 and 82. We're watching the CPI on Friday. And in the meantime, a lot of you were putting the keyword in, actually. Liv, I was checking it out earlier. You were really on fire. Thanks for that. All the live comments here. It really makes me happy. So that'll be tomorrow's video. What are we going to talk about? Strategy, how to get ready. So I'm going to share some clips from the Club Live, which happens every Thursday at 9 p.m. All right. So normally this is something that shouldn't be public. I'm going to share with you some strategy highlights, how to get ready. And above all, we're going to talk about getting motivated again, because the phrase we're going to learn, in my opinion, the best one. And we'll talk more about the challenge next week in greater detail. I'll see you tomorrow. Have a great weekend, and see you tomorrow for the live clip. Ciao. This was Julian. Don't hesitate to show some support. Subscribe if you haven't already. Comment for the algorithm. And anyway, thank you for being here. It's a pleasure. Ciao.